I'm Matt Bouchard with REIT.com here in San Francisco for REITWorld 2013, NAREIT's annual convention for all things REIT. Joining me today is Rick Romano, Managing Director and Portfolio Manager with Prudential Real Estate Investors. Rick, thanks so much for joining us.
Thanks, Matt.
Let's talk about the real estate sectors. Are there any in particular you think bear watching for 2014?
Sure. Yeah, I think they all bear watching in one way, shape, or form. What we're focusing on is cash flow growth right now. If we look back and see what's going on with interest rates, we want to be positioned in sectors that we feel like can give us good growth. Now, we try to look at growth in relation to value. And when we look at that, we like the regional malls and apartments going into 2014. We think that they underperformed a little bit in 13 and are poised now to show cash flow growth in 14, maybe above and beyond the REIT average.
And REITs have had pretty open access to the capital markets this year. And in this type of environment, should REITs be looking to deploy this fresh capital for growth or using it more to stabilize their balance sheets?
Well, I think in certain cases, REITs that have their balance sheet straightened out, that did a good job, in this open capital markets environment of repairing their balance sheet, terming out their debt, those companies should be focused on growth opportunities. Now, it's hard, right, because things are very competitive. Where do they find growth? We're seeing that some companies are finding it in redevelopment. So if we look at the regional malls again as an example, they have opportunities within their portfolio to redevelop at 9 or 10% type yields. On a pure acquisition basis, I think it's very difficult to use capital in a long-term accretive way right now. In a limited sense, I think there's development opportunities as well for certain property types, industrial apartments particularly right now.
What do you think will be the biggest challenge or obstacle for REITs or REIT investors as we move into 2014?
I would say that if you look at quantitative easing, there's really only one direction that interest rates are going, and that's going to be up over the next 12 months. And so that will provide challenges for REITs because they're an income vehicle. And so REITs that can grow their dividends, grow their cash flows, are going to be better positioned in that challenging environment as we go into 2014.
Great. Rick, thank you so much for joining us.
Thanks, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.